The PDT rule ends June 4. The $25,000 floor drops to $2,000. You can now day trade stocks in a margin account with a fraction of the capital previously required. But here is the question no headline answers. Which broker actually gives you the best execution, lowest costs, and most reliable platform for stock day trading under the new rules? Not every broker is equal for equities. Some route your orders through payment for flow, costing you pennies on execution quality. Others give you direct market access. Some have 4 a.m. extended hours. Some don't even offer real-time Level 2 data. The 18-month phase-in period also means not every broker will offer PDT-free stock trading on June 4. Your broker choice determines your buying power, your margin costs, your execution speed, and how aggressively the new IML framework liquidates your positions intraday.
Welcome to Market Lens. I'm Daniel Reed. Today we are comparing 6 brokers specifically for equity day trading: Webull, Robinhood, Interactive Brokers, TradeZero, Cobra Trading, and Charles Schwab. Every data point is sourced from regulatory filings, broker disclosures, and independent testing.
Let's start with the brokers that have confirmed unlimited stock day trading on June 4. Webull, ticker BULL. Webull announced on April 15 that the new intraday margin rules take effect on their platform day 1. No PDT restrictions, no trade counting, stock commissions, $0. No commission for buying or selling US-listed stocks and ETFs. No inactivity fee. No account minimum. You can open an account with $0 and fund it later. Margin rates: 6.8% APR on margin balances. This is mid-range among retail brokers. Execution: Webull uses payment for order flow for stock orders. Your orders are routed to market makers who pay Webull for the right to execute them. This means you get $0 commissions, but your fills may not be the best available price. For small retail orders under 500 shares, the difference is typically fractions of a penny. For larger orders, the cost and slippage can exceed what you would pay in commissions elsewhere. Liquidation risk. Webull uses automated forced liquidation. If your net account value falls to or below maintenance requirements, the system liquidates positions without notice. Under the new IML framework, this is monitored intraday, not at close. A position moving against you midday can trigger liquidation before you can close it manually. This is the most aggressive liquidation policy among the brokers in this comparison. Extended hours: 4 a.m. to 8 p.m. ET. Full pre-market and after-hours trading on all U.S.-listed stocks.
Level 2 data, available real-time order book depth, paper trading, yes with $100,000 in virtual funds. Pros: $0 commissions, strong charting, Level 2 data, extended hours, day 1 ready, $0 minimum. Cons: PFOF execution, aggressive automated liquidation, no direct market access.
Who it is for: the retail trader with $2,000 to $25,000 who wants commission-free stock trading with solid tools and immediate PDT elimination. TradeZero. TradeZero America confirmed June 4 readiness for stock trading. Stock commissions: 3 tiers. 0 free, $0 per month, $0 limit orders on NYSE, Amex, NASDAQ stocks above $1. Paid orders at $0.005 per share, 99 cents mint, $7.95 max. 0 Pro, $59 per month for direct market access. Commission rates apply on both tiers. Minimum deposit, $500. Margin rates: 0.09% variable, based on the broker's cost of funds. This is the lowest advertised rate among all brokers in this comparison, but it is variable and can change. Execution: direct market access on 0 Pro. No PFOF on the professional tier. Orders route directly to exchanges. This matters for stock day traders because direct access means your order interacts with the actual order book, not a market maker's internalization engine. Extended hours: 4 a.m. to 8 p.m. ET. One of the widest trading windows available. Short selling: TradeZero's core differentiator. Patented short locator tool. Access to hard-to-borrow stocks. Credit back on short locate fees. This is the best broker in this comparison for short-selling equities. Liquidation risk: automated mark-to-market margin system. Controversial history: TradeZero paid a $100,000 SEC fine for halting trading in AMC, GME, and KOSS during the 2021 meme stock volatility. Their liquidation system is aggressive during volatile conditions. Platform: 0 Pro desktop with 80+ technical indicators, Level 2, hotkeys.
Pros: direct market access, best short selling tools, wide extended hours, low margin rates, day 1 ready. Cons: $500 minimum, controversial history, per share commission model, increases costs for large orders, complex platform.
Who it is for: The active stock day trader focused on momentum, short selling, or extended hours trading. Cobra trading. Cobra trading confirmed June 4 readiness with a banner, effective June 4, 2026, the PDT rule will be eliminated. Cobra trading will be ready on day 1. Stock commissions. $0.005 per share, $1 minimum. This is higher than Webull or Robinhood, but buys you direct market access and professional execution through TradeZero Pro or Sterling Trader platforms. Minimum deposit, $500 to $1,000 for day trading accounts. Margin rates, negotiated based on account size and activity, not publicly listed. Execution, direct market access, no PFOF. Cobra routes orders through DAS or Sterling, which are the industry standard platforms for active equity day traders. Execution quality is best in class for retail stock traders. Extended hours, available through DAS, Sterling platforms. Liquidation risk, real-time risk monitoring with direct communication. Cobra is more responsive than automated retail platforms, but the liquidation mechanism is the same. If equity drops below maintenance, positions are reduced or liquidated. Pros: professional platforms, DAS, Sterling, direct market access, human support, best execution quality for active traders. Cons: higher commissions, higher minimum deposit, steeper learning curve, not for beginners. Who it is for: the serious stock day trader with $10,000 plus who needs professional execution and platform reliability. Robinhood, ticker HOOD. Robinhood has not confirmed June 4 implementation for equity day trading. This is the single most important uncertainty for retail stock traders. Robinhood is the largest retail broker by accounts with over 23 million funded accounts. The median account balance is estimated between $3,000 and $5,000. The PDT elimination directly benefits Robinhood's user base more than any other broker. Their stock jumped 7.61% on the SEC approval day. Mizuho raised price targets citing the PDT change. But if Robinhood does not implement the new rules on June 4th, every Robinhood account under $25,000 remains subject to the old PDT restrictions. You are locked at 3-day trades in 5 business days until they flip the switch. Stock commissions, $0. No commissions for U.S.-listed stocks and ETFs. Margin rates, 5% APR for balances up to $50,000 with Robinhood Gold, $5 per month. This is the lowest standard retail margin rate in this comparison.
Informative. The first $1,000 of margin is included with Gold. Execution. Robinhood uses PFOF exclusively. The SEC has investigated Robinhood's execution quality practices. For small orders, execution is generally adequate. For active day traders, the lack of direct routing creates a structural disadvantage.
Extended hours, 7 a.m. to 6 p.m. ET, but only through Robinhood's limited Windows desktop app. The mobile app has basic pre-market and after hours from 9 a.m. to 4 p.m. Level 2 data, not available on Robinhood. Liquidation risk. Robinhood's automated liquidation system has been controversial. During the January 2021 meme stock volatility, Robinhood restricted buying and faced congressional scrutiny. Their system can sell positions without notice if margin requirements are breached. Pros: lowest margin rates at 5%, simplest interface, $0 minimum, no commissions, Gold includes $1,000 free margin. Cons: no confirmed June 4 date, PFOF execution only, no level 2 data, limited extended hours, controversial liquidation history, not designed for active day trading. Who it is for: the beginner or casual stock trader. Not suitable as a primary platform for serious equity day trading. Interactive Brokers, ticker IBKR. Interactive Brokers has not published a specific June 4 implementation date. They are the industry leader in margin rates, execution quality, and global market access. Stock commissions. IBKR Lite offers $0 commissions for U.S.-listed stocks and ETFs. IBKR Pro uses tiered pricing starting at $0.005 per share, decreasing with volume. Pro also offers per-share variable pricing at $0.0005 to $0.0035 per share. Margin rates. IBKR Pro is the industry leader. Benchmark plus 0.5% to 1.5%, currently approximately 5.1% APR. IBKR Lite charges benchmark plus 2.5%, approximately 6.1%. At $50,000 borrowed, IBKR Pro costs approximately $2,550 per year versus Schwab at $5,665. Execution. IBKR Pro uses smart routing across 150-plus markets and 40-plus countries. No PFOF on Pro. This is the best execution quality available to retail stock traders. IBKR Lite uses PFOF. Extended hours, 4 a.m. to 8 p.m. ET. Level 2 data. Available with market data subscriptions. Liquidation risk. IBKR uses incremental liquidation. The Risk Navigator tool provides real-time margin visibility. If equity drops below maintenance, IBKR liquidates only enough to bring the account back into compliance, not the entire position. This is the most sophisticated and forgiving liquidation system among all brokers in this comparison. Platform. Trader Workstation is the most powerful retail platform. IBKR Desktop is a newer, simplified interface. Both have steep learning curves compared to Webull or Robinhood. Pros: lowest margin rates, best execution quality. Pro: smart routing, global access, incremental liquidation, no PFOF on Pro. Cons: no confirmed June 4 date, complex platforms, steep learning curve, market data subscriptions cost extra. Who it is for: the serious day trader who prioritizes execution quality and margin costs and is willing to learn a complex platform. Charles Schwab.
Schwab published their timeline. June 8th, they stopped counting day trades and removed PDT restrictions. Not June 4th, but close.
Stock commissions, $0. No commissions for U.S.-listed stocks and ETFs. Margin rates, 11.33% APR for standard margin balances. This is the highest rate in this comparison by a significant margin. On a $10,000 margin balance, Schwab charges $1,133 per year versus Robinhood's $500. On a $50,000 balance, Schwab charges $5,665 versus IBKR Pro at $2,550. Execution. Schwab routes orders through multiple venues including internalization and exchange routing. No PFOF on all orders. They have a unique arrangement that routes some orders to Citadel Securities and other market makers. Extended hours, 7 a.m. to 8 p.m. ET through StreetSmart Edge. Level 2 data, available with StreetSmart Edge. Liquidation risk, standard maintenance margin call process. Schwab is less aggressive than Webull's automated system, but also less responsive than IBKR's incremental approach. Platform. StreetSmart Edge is adequate for casual day trading, but not competitive with DAS, Sterling, or TWS for active trading. Pros: trusted brand, $0 commissions, real-time margin monitoring, June 8 implementation. Cons: highest margin rates at 11.33%, platform not designed for active day trading, behind on June 4. Who it is for: the established Schwab customer who does not need to day trade on June 4 and values brand trust over margin costs. Let's put the numbers side by side. June 4 stock trading readiness. Day 1 ready, Webull, TradeZero, Cobra trading. June 8th, Charles Schwab. Not confirmed, Robinhood, Interactive Brokers. Stock commissions. Robinhood, $0. Webull, $0. IBKR Lite, $0. Schwab, $0. TradeZero, $0 to $0.005 share. Cobra, $0.005 per share, $1 minute. Margin rates APR, 50K balance. Robinhood Gold, 5.0%. IBKR Pro, 5.1%. IBKR Lite, 6.1%. Webull, 6.8%. TradeZero, 0.09% variable. Schwab, 11.33%. Annual interest cost at 50K margin. Robinhood, $2,500. IBKR Pro, $2,550. Webull, $3,400. Schwab, $5,665. Execution model. Direct access. TradeZero, Zero Pro, Cobra, DAS, Sterling. Smart routing, no PFOF. IBKR Pro, PFOF. Webull, Robinhood, IBKR Lite, Schwab, blended. Winner, IBKR Pro, Cobra, TradeZero for active traders. Minimum deposit, $0. Webull, Robinhood, IBKR, Schwab. $500. TradeZero, Cobra. Extended hours, 4 a.m. to 8 p.m. Eastern Time. Webull, IBKR, TradeZero. 7 a.m. to 8 p.m. Eastern Time, Schwab. 7 a.m. to 6 p.m. Eastern Time, Robinhood. Liquidation aggressiveness, most to least aggressive. 1. Webull, automated, no grace period, intraday monitoring. 2. Robinhood, automated, controversial history. 3. TradeZero, automated, history of halts. 4.
Cobra, real-time but responsive. 5. Schwab, standard margin, call process, pause. 6. IBKR Pro, incremental, most forgiving.
Platform rankings for stock day trading. 1. Cobra Trading, Das Trader Pro Sterling, Professional Standard. 2. Interactive Brokers, TWS, most powerful, hardest to learn. 3. TradeZero, Zero Pro, direct access, short tools, extended hours. 4. Webull, best retail platform for active stock trading. 5. Charles Schwab, Street Smart Edge, adequate, not designed for day trading. 6. Robinhood, not designed for active day trading. Short selling. TradeZero is the clear leader with patented short locator, hard-to-borrow access, and credit back on locate fees. Cobra and IBKR also support short selling with locate services. Webull and Robinhood offer limited short selling. Schwab offers standard short selling. Payment for order flow. Robinhood, Webull, and IBKR Lite route stock orders through PFOF. This means your order is sent to a market maker, Citadel, Virtu, etc., who executes it internally.
The market maker pays the broker a rebate, which funds $0 commissions. The cost to you is potential price improvement you might have received on an exchange. For small retail orders under 500 shares, the difference is typically negligible. For larger orders or during volatile conditions, the cost can be material. IBKR Pro, TradeZero, Zero Pro, and Cobra do not use PFOF. Your orders go directly to exchanges. This means you may pay commissions, but you get the best available price at the time of execution. The new intraday margin framework changes how stock day traders need to think about risk. Here are the specific equity trading implications. Intraday margin deficit for stock trades.
Every stock purchase or sale in a margin account that reduces your intraday margin level is an IML-reducing transaction. If a stock position moves against you intraday and your account equity drops below maintenance at any point, that triggers a deficit count. 5 deficits in 5 business days equals a 90-day freeze on creating new short positions or debit balances. This is specifically dangerous for stock day traders who hold positions through midday slumps. A stock that gaps down $1 against your position at 11 a.m. and recovers by 2 p.m. still triggered an intraday deficit at 11 a.m. The fact that you recovered by close does not erase the intraday event. The de minimis exception. Deficits under the lesser of 5% of account equity or $1,000 are excluded from the 5 deficit count. For a $10,000 account, this means deficits under $500 are not counted. This provides a small buffer for minor intraday drawdowns.
The cash account alternative. If you trade stocks in a cash account under T+1 settlement, you are not subject to the IML framework, but you face settlement limitations. You can only trade with settled cash. A sale of a stock purchased with settled cash today makes those funds available to trade the next business day. This limits day trading frequency.
The margin trade-off. Margin gives you unlimited day trades under the new rules, but every trade is monitored intraday. Cash account gives you settlement limitations, but no intraday surveillance. For stock day traders with accounts under $10,000, the cash account may actually be safer under the new framework until you understand how the IML monitoring affects your strategy. The rate differential impact. Margin rates across these brokers range from 5% to 11.33%. For a leveraged stock day trader, this is the single largest cost variable. At Robinhood's 5%, $50,000 in margin costs $2,500 per year. At Schwab's 11.33%, the same $50,000 costs $5,665 per year. Over 3 years, the Schwab user pays $9,495 more. That difference can be the edge between profitability and break-even. The execution quality impact.
Exhales. For high-frequency stock day traders, PFOF execution can cost 0.5 to 1 cent per share in adverse selection. On 1,000 shares per day, that is $5 to $10 per day, or $1,250 to $2,500 per year. This is smaller than the margin rate differential, but still material.
Here's the decision framework specifically for equity day trading. If you have $2,000 to $10,000 and want to start stock day trading on June 4, Webull is the default. Day 1 ready, $0 commissions, $0 minimum, solid charting, level 2 data, extended hours. The trade-offs are PFOF execution and aggressive liquidation. Maintain a 50% buffer above maintenance requirements. Do not use maximum buying power. Robinhood is the alternative only if your account is already there and they confirm June 4 implementation before the deadline. But Robinhood's lack of level 2 data and limited extended hours make it inferior to Webull for active stock trading. If you have $5,000 to $25,000 and trade stocks actively, TradeZero offers direct market access, wide extended hours, and the best short-selling tools. The $500 minimum is accessible. The $59 a month Zero Pro tier pays for itself in execution quality if you trade more than 10,000 shares per month. Consider Interactive Brokers Pro if they confirm an early implementation date. IBKR will have the lowest margin costs and best execution, but only if you can navigate or learn the platform. If you have $25,000 plus and trade equities professionally, Cobra Trading with Dash Trader Pro or Sterling Trader. Direct market access, best execution quality, human support. The higher commissions are justified by the platform quality and execution speed. For every equity trader, compare your current margin rate to Robinhood Gold at 5% and IBKR Pro at 5.1%. If you are paying more than 7%, you are losing money that could be saved by switching. Compare your execution model. If you are on PFOF and trading more than 10,000 shares per month, consider whether direct access would save you more in fill quality than it costs in commissions. Verify your broker's stock day trading readiness this week.
If they are not confirmed for June 4th, open a backup account at a day one broker.
I'm Daniel Reed. This has been Market Lens. All key comparison metrics are in the description.